Good morning, everybody. It's the 1st of February. We're Signal Centre Talking Ball. I'm Joe, joined by Steve. How you doing, Steve?
Very well, thanks, mate. That was a quick introduction.
Yeah, I forgot to press the button today. A few issues going on. So usually we're streaming to TradingView Live each day, but seems to be some issues with that. So they're working on it. Hopefully we'll be back up and running on TradingView very soon. But in the meantime, we will continue. The show must go on, Steve. So
Exactly.
we will go through the latest headlines. We'll go through the technical look at the charts, and then we'll shape you up for the day ahead. And there's plenty going on today. So let's start off with the headlines and what's been moving markets over the past 24 hours and what markets are focusing on the 24 hours ahead. So yesterday, Eurozone avoids negative growth. The Eurozone recorded a 0.1% increase in GDP for the fourth quarter, compared with expectations of a 0.1% decline. There was, however, a slowdown in the annual growth rate to 1.9% from 2.3%. We've seen the US consumer confidence edge lower. The consumer confidence declined to 107.1 for January from an upwardly revised 109 the previous month and below expectations of 109. Although there were net improvements in the current conditions index. This was offset by a dip in expectations, with consumers also less confident over the labour market outlook. The US wages inflation eases slightly. The employment cost index increased 1% for the fourth quarter, marginally below the consensus forecast of 1.1%, although there were the data was close to expectations. There were hopes over an easing of wages pressure. Decent rally yesterday in Wall Street, maybe a bit of month-end positioning to boost the performance statistics. The employment cost data helped trigger a rebound in Wall Street sentiment, with equities posting significant gains, which also underpinned global confidence. The UK mortgages approvals has slid over the previous month. The latest UK data recorded a further sharp decline in mortgage approvals to 35,600 for December from 46,200 the previous month, and that was also well below the consensus forecasts. The dollar was unable to hold on to its gains yesterday as a result of the rally in Wall Street. We saw the dollar lose a bit of ground, bit of month-end selling going on there, as well as some dip buying going on in the euro. And today it's all about the Fed policy decision. The Federal Reserve will release their latest policy statement today, with strong expectations that the central bank will slow the pace of rate hikes to 25 basis points, which will take the Fed funds to 4.75%. Forward guidance is going to be the main thing of interest. The statement and the rhetoric from Chairman Jerome Powell will be crucial in the elements for asset prices going forward. We've also got the latest US ADP data and the ISM manufacturing data. Again, they will help in setting the tone for the Fed policy decision and what comes in the statement. We've also got Eurozone inflation today. The latest data will be released around, I think, 9 a.m. UK time. So the headline forecast rate is for a decline to 9% from 9.2%. So we'll be keeping an eye out for that. Sorry, that's out at 10 a.m. UK time. Okay, let's get stuck into some charts then, shall we, Steve? Do you want to kick us off with a look at the cryptocurrencies?
Yep. Let me just present my charts on my screen, rather. It did look like we were live for a second, Joe, but that seems to have disappeared. I don't know whether it is or not. So anyway, for a second we were live. It seems to have sort of like broken again, but maybe it's just what we're seeing. Let's crack on with Bitcoin, the major crypto that we look at, and that has continued to move higher. It's actually extended higher, and when we look at Fibonacci extensions, we highlight a number of crucial levels on this. It's we obviously always look at the sort of like 100% move higher, which is this level here, 20,170. We look at a 1.618 extension level on the fib and a 2.618 extension level, and that's seemed to have capped the gains at the moment. 24,000 is the high recently, and then we had Monday's price action was a bearish engulfing candle. Yesterday we sort of like the ship was steadied above the support level, which is coming in around about 22,365. That's crucial. That should hold there. If it doesn't hold, then it opens up a move back down to retest the moving averages, the major moving averages. We're looking to get a bullish crossover here, the 55-day moving average crossing over the 200-day moving average, both are moving higher. So that's a real big technical crossover to look out for, really. Last time we had the opposite crossover was way back in, well, this time, well, just over a year ago, 16th of Jan, where we had a crossover to the downside. So yeah, it's pretty important price action going on. The major resistance above comes in around about the 25,000 to 25,400. But as I say, we've stalled at 24,000. That's the first level of resistance that buyers will be looking to take out on the march higher. Overall, I'm still bearish on Bitcoin on a long-term basis, but the short-term basis, I'm not going to argue with it. It's moving higher and looks quite solid at the moment. Taking a look at gold. This is a daily chart on gold. Price action dipped lower aggressively yesterday. That's probably a day too late for my silver trade idea, but nevertheless, it did get down to support around about the 1900 level and bounced really sharply from there. 1900.87 was the low in gold, and it ended the day $25 higher. Where did it close? $28 higher, 1928 it closed. It's a little bit lower than that this morning, but that's a real nice reaction from the support level. So again, it's it feels like there's the Fed announcement or the Fed meeting later is going to lead to some sort of volatility in gold. Obviously, it'll be all based around the dollar, which is just lifted slightly since I last looked at it. It's trading around 102 at the moment on the dollar index. So levels to watch on the upside, 1950. And we have an inverse head and shoulders formation. That's the measured move target for that was 1966. Great year for England, World Cup winning squad. Above that, 1997, and obviously then we start talking about the all-time highs again. 2070 was the high in March 22. Before that, we had obviously the all-time high August 20. Which is 2075. So they're the levels we're looking at the moment. Support really that 1900 level. Silver, quick look at that. Again, it seems to be stalling in front of this measured move target. And obviously we've got price action, which we saw between March and April last year, which is sitting on top as a nice bit of resistance at the moment. There's a further resistance band above. Around about $27 was the high, last year's high. So that's would be a target for this upward move. This inverse head and shoulders, same sort of price action as gold. We've had the bullish crossover, the golden cross, 55 over 200. That took place December the 23rd. At the end of last year, but since then we've just seen sideways price action. So really waiting for that next momentum push to sort of like take this higher. Support coming in at 22.50. That's where we've been down to a couple of times. In the meantime, also the 55-day moving average seems to be doing some work in supporting price action also. So we had a dip down yesterday, got down to just below the $23 level before reacting higher and closing all the way up at 23.73. So looking pretty positive as well on silver. Copper, same sort of price action on this precious metal, stalling at the moment around about 61.8% fib, the $4.30 level. If you remember, we had a real big resistance previously around about the $4 mark, 396, which we eventually broke through at the start of the year, 9th of January. And since then we pushed higher. But again, this sideways price action. We've had a golden cross on this already. So positive overall on the longer term basis. And it feels like we're just settling down, ready for the next push, ready for this next dollar move, I suppose. That's pointing towards a dollar move lower. So we'll see how that plays out later. Crude oil, that seems to be capped around about the $82 to $83 level on WTI crude oil. We've attempted numerous times over the last couple of months to sort of push through there, and that's the 100-day moving average, this orange line coming down, and that seems to be capping price action at the moment. Yesterday we saw the sell-off extend lower, got down to 76.65. on this chart, and then before bouncing. So it's posted a little bit of a bullish hammer. So it's quite a, overall, I'd say that's a slightly positive candle. Obviously, we've got oil inventories today, so that's one to look out for. That'll add the volatility to it, but a nice little reaction from support. And on a positive note, we've started this morning as well. Brent crude oil is trading at a, well, it looks like $6 premium now, so it's extending higher, but same sort of price action. Nice bullish hammer we posted on yesterday's, after yesterday's price action. The low 83.11, the high 85.73, and we closed at 85.43 yesterday. So nice bounce from after a 3-day sell-off. And natural gas, we've talked about this. There's another. It seems to have sort of like gone very quiet this week. We've had this real big, long, extended move lower. Doesn't seem like there's anything really there to support it. We've got previous support, previous levels of swing lows at around about the 225 mark, but we've got this big head and shoulders formation which has a measured move target down at 135. Still sort of like scratching my head, trying to understand whether it'll get there or not, because that would be a huge collapse. I mean, already since November, 23rd of November, so only 2 months, we've seen a 67% sell-off in natural gas. I mean, that's massive. So yeah, leave you with that, Joe. Again, I think we really need to sort of like work out where this dollar's going today to get some idea as to where to invest.
Yeah, okay, let's take a look then. So not really any change, to be honest. So we know that the long-term picture is bearish, given that we've got this large head and shoulders top pattern that's played out on the dollar index and prices continue to grind lower. We've got this key support from May 2022 in red, which is preventing prices from moving lower. Certainly the velocity of the move down has slowed, and we can see that in recent weeks there's been a few long wicked candles in here, a lot of dojis, a lot of indecision basically with regards to the dollar index, and that's just around a 50% Fibonacci retracement level of the entire move upwards that we saw and then retrace. So not really too sure what to say on this at the minute. I mean, clearly the overall trend remains bearish, but I just feel that at some point maybe there's going to be a bit of a corrective bounce on this one to maybe move to the upside in the short term. But yesterday we could have argued that that was happening. We saw 3 positive days in a row. We then saw a big move to the upside yesterday before actually closing lower on the session. So that's a negative candle, suggests a reversal. So maybe we'll see a pull back to this new support at 101.54, and then just below that we've got support at 101.30. But it is a very, very important day for the dollar because we've got lots going on. Obviously, we've got this Federal Reserve decision, plus we've got the ADP jobs number. So it's likely to be a very volatile day for the US dollar. And if we do get any indications of concern amongst the markets and people worrying about the outlook for the US economy, then it's likely that we will see the US dollar start to rise off the back of that and re-establish itself really as a defensive asset. And that could obviously trigger further sell-offs in some of these equity markets, given that they've had a pretty strong move to the upside of late. So yeah, watching and waiting on this for the moment. It feels as though, given that we've got a lot of these sideways and indecisive candles, that maybe we are going to see some sort of move temporarily to the upside, maybe as high as 103.45. Let's take a look at euro US dollar. So we can see here that prices, again, like the US dollar, are stalling just in front of a 50% fib level at 109.42. Bit of indecision here. We do have a pretty steep upward trend in place at the moment, as highlighted here by this blue line. We've got horizontal support on offer at 107.36. So potentially we could see some pullback towards this kind of zone. On the upside, if we can get a clean break through this 50% level, then that would maybe set up further upside moves towards the 61.8% fib level at 112.74. But it seems to be stalling a bit at the moment, maybe just consolidating. So again, I think today or this week at least could be quite pivotal for anything linked to the US dollar. But in terms of calling a direction from here or trying to trade it, I think that's pretty tough. I think if I had a gun to my head, I'd probably be thinking about buying the dollar because I just feel that's probably got more value in it than maybe looking to sell it in line with the dominant trend for the time being. Let's take a look at cable. We can see here that prices again are stalling into this horizontal resistance that we've got in blue at 124.30. So it was a level back here in June. We broke through that. We've then seen a couple of retests of this level and so far failed to get through. In the very short term, prices are trapped in this really tight range. The lower end of that range coming at around 122.85, the upper end coming in at 124.28. So yeah, pretty tight stuff. If we get a break to the upside, then we can start looking for a move up to this 61.8% fib level. We are pulling back to the basically the trend line support. So if we get some buying support in here, we could see a push higher. However, if we get a break, then that could trigger a pretty tasty correction in the short term on cable. So again, feels like we're at a pivotal point on this market as well. Let's take a look at some of these Aussie markets. I mentioned last week that I thought they were potentially in the process of maybe forming some tops. This is Aussie US dollar. So that's rallied into some significant resistance here, a 61.8% fib level of this entire move. We've now seen a test of that, and we posted a couple of doji candles having reached that level, and then a bit of a reversal on Monday. But yesterday we came fighting back. It looks as though the dollar was going to really start accelerating on the upside, pushing this lower, but the bulls stepped back in and pushed it higher. Now, my only concern about this is that it was month end. So was there any kind of window dressing that went on here? People buying it up, trying to improve the marked figure for their P&L for the month, and maybe push the prices maybe artificially higher. But having said that, they are moving higher again today, up by 0.35%. But we've still got this big band of resistance that we need to overcome. If we can get above this on a closing basis, then there's obviously a fair amount of fresh space for us to move into on the upside. Then we'll be starting to target maybe the 78.6% fib level up here at 73.42. Let's take a look at New Zealand dollar, US dollar. Again, that's another interesting one. I've got a big inverse head and shoulders drawn on this chart, but it's not broken through yet. So the neckline is proving to be pretty formidable resistance as it stands. That's a 65.13. So we can see here, if we zoom in, a number of attempts now to try and break through this, but on each occasion it's failed. Yesterday we posted some losses, certainly didn't get the same recovery that we did on the Aussie market, but it's still holding arguably short-term trend support. If it does push to the downside here, then maybe it will spark a bit of a correction, and we can maybe think about invalidating this bottom pattern. But also, if it does break through the upside, then we've got a very impressive bottom pattern that's been put in place there, and we can start looking for much higher prices, as high as 75.14 over the medium to long term. But it hasn't completed it yet, so we can't get too excited. But it's a watching and waiting situation for now. Let's take a look at dollar yen. So this really isn't going anywhere. We've seen prices move lower within this bearish channel. We broke up through the channel, but we haven't really seen any push to the upside. In fact, prices have been so trapped in recent days below these resistance levels here. You can see all these candles. Each time it keeps bashing its head on this resistance level at 130.40, and it's not getting through. So again, formidable resistance. And if it continues to fail, and if we get a big move today, my preference is probably that it's going to be there going to the downside, which would suggest further dollar weakness. So really mixed signals on a lot of these dollar markets at the moment. Of course, given that we've seen the break of this channel, if we can get through these resistance levels, that would be it maybe trigger a decent correction higher, maybe towards this level here around 134.50. I'll leave it there, Steve, on the currencies. Just go through the majors basically, unless there's any other requests.
Euro Swiss.
Euro Swiss. Okay, let's take a look. Daily chart. So this looks as though it broke out through a big level of resistance at 99.45 back here on the 10th of January. Prices pushed higher, then we saw a pullback. Did overshoot that uniform support by a bit, but we've rallied back above it, and this now appears to be acting as support. So big move to the downside yesterday. I think my bias here is for higher levels. There was some speculative interest in euro yesterday, but obviously the Swiss franc is typically viewed as a safe haven asset. So for euro to move up, or this pair to move up, we need euro strength and Swiss weakness, which would suggest that we're looking for a positive outcome today from the Fed statement and some, rosy pictures going forward. And if that's the case, then we may well continue to see this move higher. But what we can't rule out is, although we're looking at this dominant sort of setup here and the breakthrough that resistance, is that maybe this is forming some sort of short-term double top on Euro Swiss, and a breakdown below support here at around 98.86 would maybe trigger a short-term double top and maybe send prices lower. So again, I think it's so difficult to call a direction either way, to be honest, Steve. And I'm really concerned about the gun to the head trades, about what we're going to do to try and be sheltered from whatever it is the Fed do today.
Yeah, it does feel a bit like that, Joe. I'm just thinking about it, looking for some inspiration from you going through there, but it just looks like such a mixed bag. Do we stick with the dominant trend? Just feels like it sort of it doesn't feel like the right thing at the moment because of the where the real value is in putting a trade on.
Yeah.
But anyway, we'll dive into the indices. There's been a couple of requests. The Dow, US dollar, US 30 USD on this chart, and we'll take a look at this. As we know, over the last weeks, we've been above the downward trending resistance. We're trying to break higher. We've had some nice turnaround on the daily chart. Nice double bottom we got, which extended higher, and we have broken through the resistance here. You can see here, and we made a new high, new swing high. But we've still got sort of like major resistances up above. We're between the 61.8 and the 78.6 fib retracement levels from the high of last year, which was early January, it was, all the way down to the lows and extending higher. So looking pretty positive. Moving averages are supportive as well. The 100 has just crossed over the 200-day moving average also. So that's another signal that the overall trend is higher. I'm still a little bit tentative on it, but you've got to, you've got to go with the flow, really. You can't argue it with the market. Yesterday's price action was a bullish outside candle after Monday's start to the week, and we've pushed higher. Last Friday's high, 34,137, is under threat. Only 137 points away. Not a lot really in the Dow. Also considering that yesterday we had about a 600, 700 tick range. So for me, it sort of like looks to be a case of looking to find good value and buying dips in the Dow at the moment. So that's looking positive. On the shorter term charts, I always refer to the Ichimoku cloud. That's a good little indicator for signaling trend. It has been sideways. We're chopping above and below the cloud. Currently, we're below it. The cloud support worked pretty well yesterday at 10 o'clock, the 10 o'clock candle, and pushed nicely higher. We're stalling now. Resistance really at 34,137. As I say, that's a target to take out, forming a nice little bit of a bullish flag potentially on the short-term charts, hourly chart as well above the cloud. So looking positive on US 30. Looking at Nasdaq, that's really struggled compared to its big brother. This is obviously the tech sector, so it does have a lot of serious stocks in here, and but we have managed to break above the downward trending resistance. That was last week. Nice break above it. We took out the previous swing high from the week of the 12th of Dec, and although we've had a little bit of a pullback this week, we have actually started to bounce back. You can see the sort of like Monday's candle was a bearish engulfing, and yesterday's was nice supportive, like bullish hammer type candle to finish the end of the month. So overall, on a monthly basis, January's been a pretty good start, and that normally signals that that wherever the sort of trend is in January, we sort of like get that trend following through for the rest of the year. But I wouldn't be laying my hat on that too soon in the year. So resistance 12,255, support for me coming in at 11,820. We're above the 200-day moving average, and the 55-day has crossed back over the 100-day. So good signs from the technical aspects of Nasdaq 100. S&P 500, again, bullish outside candle yesterday after Monday's poor start, so looking pretty decent. Clean this up a little bit. The moving average is 55, crossing over the 100-day 200-day moving average. That's the golden cross confirmed. So we're looking to push higher in this as well. Resistance above comes in the shape of 41.41. That was the swing high from the 13th of deck, so that'll be a target. I think today feels like the day that we could really sort of really start to motor higher if we get a decent input from the Fed. Overall, the US looking positive. Taking a look at across the pond here in the UK, we're looking at FTSE, same sort of price action. We've had this like nice sort of like ABC correction higher. Is it start of a new trend? We have broken through the resistance, the previous swing high that we got from July 2019. Obviously, we got this one here. This is the all-time high here. 7,903. That's the main target for the bulls this year. We've had the golden cross. We're also getting the 100 crossing over with the 200-day moving average, so pretty positive. Support coming in around about the 7,700 level. That's the level for me, would be ideal for dip buying. And yeah, sort of like really targeting that all-time high. The FTSE seems to be motoring onwards, which is quite a surprise because the dollar's been so weak. So yeah, I really like sort of how the FTSE's shaping up.
Nice technical pullback on that, really, on the
yeah,
FTSE.
I mean, yeah, got down
considering
here.
we're the only country in the whole of the world that's going to post negative growth over the next year. Have you seen it?
Exactly. Was that the IMF or
Yeah,
sort of
IMF,
coming out? They've sort of changed their tune in the matter of a couple of weeks. It's great when you can do that as an analyst, isn't it? But when you sort of you know, fronting up a company, an organisation like the IMF, you'd think you'd sort of be a bit more consistent with what you come out with. Very bizarre. But anyway, yeah, it's look at this. Is FTSE's looking pretty positive to me. DAX, that's also performing quite well. It's broken above the resistance that we had here, 14,813. That was from previous support levels going all the way back to May, October, and 21 and January 22. So we're nicely above that. We've nearly had a retest, didn't quite get down there, but it's just been sideways price action, waiting for the explosion. Which way it explodes is we have to wait and see. But at the moment, everything's pointing upwards. So my sort of bearish mentality that I always have on indices still there in the background. Don't worry, it's not going to go away completely. But at the moment, it's definitely taking a back seat. Guns ahead, Joe. I'm a sort of bit nervous, like you said.
Yeah, I think so too. But anyway, for anyone new watching today, the gun to the head trades is when Steve and I pick trade ideas as if we had a gun to our head. What would we trade right now? And obviously this is difficult given that we've got a lot of data due out today, which is going to mean a lot of volatility. And obviously we want to pick trade ideas that have got good risk reward ratios. Therefore, you know, we have to be quite aggressive with the trades because we've only got a matter of hours for these to play out. We close them off at 9 p.m. UK time or when the stops or the targets are reached. We place these ideas at markets, and of course they must have stops and targets. So we're going to come up with two trade ideas now. We're actually going to place them live as well to a trading account that we've set up with Awanda. We put £2,000 in the trading account at the start of the year. And we're slightly down as things stand so far. The idea is this is just a bit of fun, but we do believe, given that the track record that we've developed on a simulated basis over the last couple of years, that we can turn this into a profitable account. So, Steve, we're going to go again today. We weren't trading yesterday because we had some issues with the stream, but back on today. I've got one ready. If you want me to go first.
Right.
Yeah. Okay. I'm going to take a look at sterling versus the Canadian dollar. Now I've got the daily chart up here, and we've had a very decent rally in recent months. This was the disastrous budget that was set in the UK, which basically saw sterling capitulate following a big move lower. And from that point, we've seen a pretty steady move to the upside. We've actually recovered to above the 78.6% Fibonacci retracement of that entire down move. But what really is interesting me is the intraday setup. So this is the hourly chart, and we can see here that prices appear to have started rounding off over the past few weeks or so. We had a big level of support at 164.08, and yesterday we saw a break below that And in the last few hours, we've seen a nice retest of that level and a rejection to the downside. So from a risk reward perspective, it looks quite nice. I can sell it at the current level, which is at 163.84. So Steve, if you wouldn't mind getting that on for me. I've got a stop loss at 164.36, just a few ticks above these highs here that were posted around 4 o'clock yesterday. And I'm looking for a move lower to around 162.70. So only looking for 2 to 1 as a risk reward ratio on this today. Ideally, I like to look for something a bit punchier than that. But I think if it moves down there, it's kind of moved its typical average true range for the day. So that will do for me. I'm going to.
Can you give me the levels again, Joe? Is it
sure. So selling at market stops at 164.36.
Yeah.
And the stop loss is at 162.70.
The target's 162.70.
Correct. Yeah. So we can see on Steve's account here, he's putting the trade on, and we are risking 1% of trading capital per trade on these ideas. So we'll be putting in the take profit and the stop loss and adjusting that risk level to 1%.
No, I've done something wrong because it's, what did you say, 162.70 target?
162.70, yeah. And the stop loss is 164.36.
Yeah, it's going to be 9 to 1 risk reward. How's that working out?
No idea.
164.19 we're selling at. It's not good. That's a limit order. Dear, oh dear.
Come on, sell it at market, Steve. Quick, before it goes less than 2 to 1. There we go.
There you go. 2 to 1. Just about got it, Joe.
Yep, scraped it. Right, over to you.
Right, the only thing that's sort of like, you know, I'm a very big contrarian trader. If you don't know that, you haven't been watching the shows. So I'm looking at natural gas. Now, natural gas is on a slide lower. However, we sort of like got a little bit of hope yesterday from a bullish hammer after the aggressive move lower. So I'm sort of like looking for maybe a little bit of a pullback. It feels like we've sort of like maybe forming a nice little bottom here. This last hourly candle looks pretty decent. We've got another 25 minutes left. Are we going to find support at the cloud? So I'm going to go with this, Joe. I'm going to buy nat gas against the overall trend. That's the way I roll. Let's take a look. I'm not going to risk 68%. I only want to risk 1%. So how can we do this? Stop level ideally is at 274.50. And my target level, a move back up to say something like 305. What is that? That's not enough, mate. You've got to get up to 320 at least, surely. That gives us 2.77 risk reward. So my stop is would be a new low, targeting a move back to 320, which was the previous support, now resistance. So I'm going to go with that. There we are. We're on. We're off and running. We're on to the races. So as you can see, the account below, we've got the net asset value 1937. So we are down slightly since the start of the year, or since we started. But hopefully we'll start to get some winners, Joe.
Yeah, absolutely. We need it.
Yeah. Okay.
Right, okay, let's look at the day ahead then. So it is a really busy day. I'm going to get rid of the banner so we can see it all. So 10 o'clock today, we've got the Eurozone consumer prices. This is the latest read on inflation. So obviously inflation numbers have been pretty pivotal for markets of late. Just to give you an idea, we are expecting the headline rate to decline to 9% from 9.2%. So if anything comes in less than 9%, I think that will be seen as quite bullish from the markets, and we may see a continuation higher in some of these European indices. At 1:15 UK time, we've got the US ADP jobs data. So that's a precursor to Friday's non-farm payroll number, and again will be well watched and could create some volatility. At 3 o'clock, we've got the US ISM manufacturing number, again a big number, which tends to be market moving. At 3:30, we've got the US crude oil inventories. Again, if you've got any positions in oil at the minute, that could be a pretty volatile event. And then really it's all eyes on the Federal Reserve policy statement at 7 o'clock. So what are they going to do with interest rates? We are expecting them to start slowing the pace of rate hikes to 25 basis points, taking the overall fund rates to 4.75%. But it's also going to be the guidance in the statement and the rhetoric from Chairman Powell that will be crucial elements to focus on, and that's going to be at 7:30 UK time. So pretty busy day today. So do be very, very careful. If you're looking to buy and sell markets, maybe look at more extreme levels than you would typically look at, because it's set to be a lot of volatility. And for the rest of the week, it doesn't really let up. So tomorrow we've got the Bank of England policy decision and the ECB at the same time. And then on Friday, we've got the US non-farm payroll number. So really busy week, potential for lots of volatility and maybe some shifts in some dominant trends here that we've all become accustomed to over recent weeks. Okay, that's it from us, Steve. I'm glad we're back up and running on TradingView. Thanks to everybody for watching and getting involved. Hopefully we answered most of your questions. If you've got any other markets or other things that you're interested in, please feel free to post them up throughout the rest of the week, and join us again next on the next stream, which will be tomorrow at 8 o'clock UK time.
Cheers.
Thanks, everyone. Have a great day. Bye-bye.